All right, let's talk about that life insurance you get through work. It's a really great perk to have, but did you know it comes with some kind of surprising tax rules that most of us never even think about? Getting a handle on these little details can actually make a huge difference. So let's just dive right in.
Okay, so let's kick things off with the $1 million question, or maybe the $50,000 question, as you'll see. Is that life insurance benefit from your job actually truly free? Well, the answer isn't a simple yes or no, and that's exactly what we're going to unpack right now. To get to that answer, first we've got to solve what I like to call the premium puzzle. We need to look at both sides of the coin here, what it means for your employer, and, way more importantly, what it means for your wallet and your taxes. Now, for your employer, it's super straightforward. The premiums they pay for your coverage, that's just a regular tax-deductible business expense for them. Easy peasy. But for you, the employee, well, it's a whole different ballgame. It gets a little more complex. Here's where it gets really interesting. Your whole tax situation with this benefit basically boils down to one single magic number. Seriously, this one number is the dividing line that determines whether your benefit is completely tax-free or not. And that number is $50,000. This is the key threshold set by the IRS that changes absolutely everything. 50 grand. So let's break down what this actually means for you, piece by piece. Okay, here's how it works. Your employer can give you up to $50,000 in life insurance coverage, and you will not pay a single dime in taxes on it. It's a pure tax-free perk. But the second your coverage goes even $1 over that $50,000 mark, things change. The cost of that extra coverage is treated almost like a hidden bonus. You don't get the cash, but the value of it gets added to your W-2 as something called imputed income, and you have to pay tax on it. So just to make sure we're crystal clear on who gets to deduct what. Employers? Yep, they get the deduction. Employees? Nope, you don't. And hey, a quick note for anyone who's self-employed. If you're a sole proprietor or a partner in a business, you can't deduct premiums for your own coverage either. The reason is, in the eyes of the IRS, you're not technically an employee of your own business. All right, so that covers the premium side of things. But what happens when the policy actually pays out? Let's switch gears and talk about the part that really matters to your beneficiaries. And thankfully, the rules here are much, much simpler. And this, right here, is where you really see the power of life insurance. If your beneficiaries get that payout all at once in one lump sum, every single penny of it is 100% tax-free. It's that simple. Now, if they choose to get it in smaller chunks, as installment payments, the death benefit itself is still tax-free. But any interest they earn on that money while it's sitting there, that part gets taxed. Okay, let's look a little further down the road. Most group life insurance is tied to your job, right? So what happens to that safety net after you retire? Well, there are actually some pretty clever plans out there that are designed specifically for the long game. One of these is called a Retired Lives Reserve, or RLR for short. Think of it as a way for your employer to pre-fund your life insurance for after you leave the company. While you're working, they make tax-deductible contributions to a special fund. Then, after you've retired, that fund is used to pay your premiums. And the best part for you? All those contributions your employer makes are not considered income for you. It's a pretty sweet deal. Now, you can also sometimes have life insurance inside a retirement plan, like a 401k. But there is a huge catch here. The insurance has to be, let's say, a side dish, not the main course. The law is super clear on this. The number one goal of a retirement plan must always be about providing retirement income, not a death benefit. The life insurance part has to be incidental to that main purpose. Whew, we have covered a lot of ground, so let's pull it all together with a quick and easy tax cheat sheet. These are the absolute key takeaways you'll want to lock in from our little explainer today. So for you, the employee, the big thing to remember is that magic number, $50,000. Anything up to that amount in coverage is a fantastic tax-free perk. For your employer, it's even easier. The premiums they pay are just a business expense they can write off. And when it comes to the payout for your loved ones, a lump sum is always a tax-free way to go. It's all right there. So now you're in the know. The next time you look at your benefits statement from work, take a closer look at that life insurance line item. Is your coverage over that $50,000 mark? Just understanding these simple rules is the first step to making really smart decisions about the benefits you've worked hard to earn.